Welcome back to the Japan FinTech Observer. Get ready for a quick hit of the latest news in Japanese finance and fintech. We're diving into the headlines, breaking down the trends, and leaving you with the insights you need to stay ahead of the curve. Let's go.
Today, we are unpacking the implications of the recently announced US-China tariff pause and what it means for Asia FX markets, based on a fascinating report from MUFG titled "Escalate to De-escalate: US-China tariff pause and USD Asia impact." Buckle up, it's a complex landscape, but we're going to break it down. So, what's the headline? Well, it centers on that May 12th announcement of a significant tariff pause between the US and China. The MUFG report stresses this was not just a minor tweak. The magnitude of the tariff cuts blew market expectations out of the water. Think about it. The US is dialing back those tariffs imposed since Trump 2.0 from a hefty 145% down to a much more manageable 30%. China's reciprocated, reducing its 125% tariffs on US goods to a mere 10%, and even suspending some non-tariff countermeasures put in place since early April. Is this a done deal? Not so fast. The report emphasizes that the future hinges on further negotiations. However, the early signs are encouraging. Communication channels are open, and the tone of initial meetings has been surprisingly constructive. Now, that does not mean disagreements won't pop up, but at least the groundwork for continued dialogue is there. Adding to the cautious optimism, US Treasury Secretary Bessent has implied a 10% rate acts as a floor, hinting that the rate announced on April 2nd of 54% was likely a ceiling. If that promise holds, it caps potential downside risks going forward. Now, let's talk about how markets reacted. Risk assets, as the report highlights, surged. The S&P 500 and MSCI China both leaped by over 3%. Investors, it seems, are betting on stronger growth in both the US and China. Safe havens took a hit. Gold fell sharply to around $3,200, and US 10-year yields rose to 4.47% as markets priced in stronger growth. But the real story, according to MUFG's analysis, is unfolding in the FX markets. The dollar strengthened significantly, leading to some weakness in the euro and the yen. And here's where Asia comes in. Within Asia ex-Japan, the Chinese yuan, CNH, outperformed its peers, strengthening by 0.6%. Other Asian currencies, however, experienced some weakness, with pairs like KRW, THB, Thai baht, and IDR, Indonesian rupiah, all feeling the pressure. Now, it's important to recognize the underlying forces driving these moves. The MUFG report suggests we're seeing a short-term reversal of the Liberation Day effect. You might recall tariffs had weakened the US dollar. So this is a partial retracement. The earlier overperformance in your JPY and underperformance in CNY are getting corrected, while the dollar's strength is pulling the rest of Asia down with it. But where do we go from here? That's the million-dollar question. MUFG's report identifies at least three major implications for Asian currencies and economies going forward. First, they believe it makes strategic sense for Chinese exporters to front-load their exports to the US over the next 90 days. This is a race to capture as much of the benefits from the lowered tariff as possible before those rates rise again. We are seeing some of the trends as Asia ex-China countries like Vietnam, Taiwan, Malaysia, and Thailand increasing exports to the US, while China raising its exports to the ASEAN. Second, and this is crucial, the dispersion of Asia FX performance hinges on relative tariff levels. It is not just about where US tariffs on China land in absolute terms. It's about how they compare to tariffs faced by other Asian nations. Why does this matter? Because it puts pressure on countries like India, Malaysia, Vietnam, and Thailand, which are most likely to substitute China's exports, and where there are moves to try to strike a trade deal with the US. Which brings us to the most important question. What will happen to Asian currencies against the dollar moving forward? There are multiple factors at play here. The first factor is if we'll see continued questions over US exceptionalism. Second, does it impact capital inflows into US equities? And third, the big one, is the overall impact on global and regional Asia growth. And beyond the US-China tariff drama, the MUFG report reminds us not to lose sight of the upcoming US tax bill. These discussions, even at early stages, have the potential to shift market focus to US fiscal sustainability, and in turn, have a broader impact on the US dollar and consequently USD Asia currency dynamics. Thanks to MUFG for providing this incredibly insightful research. The coming weeks and months will be critical in shaping the long-term impact of this tariff pause. As always, stay informed, stay vigilant, and stay tuned for our next market update.